I just woke up from my afternoon sleep. What a wonderful sleep. I need afternoon sleep. I love to sleep in the afternoon. Anyways, whenever I wake up from my nap, I look at charts. I love studying charts. So have a look at this. As per the regulations in India, we are supposed to discuss old charts. So this is 2019. Let's go back to 2019. This is before Corona. Have a look at this base. This is HDFC Asset Management Company. Let us do an analysis of this base. I did some videos of this style base quality analysis, and I'm getting good response because subscribers want to look at different kinds of bases. So let's do it. Let's go back and check what kind of bases were formed in the past, right? And what was the quality of those bases, so that this will help us analyze bases in the future. Have a look at this base. I will draw it. So important thing here is to determine what is point number 2. Is this point 2 in the base or is this point 2 in the base? So the low of this candle is 2050. The low of this candle is 2045.40. So that means this is the low. This is point 2 in the base. Okay. If I have to draw the points in the base, see, that's point 1, point 2, point 3, point 4, 5 points in the base, correct? So I have done the base quality analysis here. Is the price above the moving averages? Yes, the price is above the blue, the green, and the red. It is above the moving averages. Is the price within 25% of 52-week high? Yes. So this is 26th August 2019. If we go back to 26th August 2018, where is 2018? Somewhere here. Okay, this is 18. What's the highest price in that range? That's the highest price. So that's the 52-week high. What is the distance between 52-week high and closing price? Less than 6%. So it is within 25% of 52-week high. What is the length of the base? 24 candles. So from here to here, 24 bars. How many do we need? Minimum 10. How many points in the base? 5 points in the base. I just marked the points for you. So this, the high of this base, which is 0.3, becomes our buy point. So this is 2334.90. Let's draw it. So 2334.90. Now, the moment you draw that line, you immediately have to draw the remaining 4 lines. What are the remaining 4 lines? Well, one is the yellow line, which is 1% above this yellow line. That becomes our buying zone. Then one is the 8% stop loss. Then 2 more lines we have to draw. One is 20% above this yellow line. Another is 25% above this yellow line. So you get the selling range. You get the 8% stop loss. You get the buying range. So let's do that. Okay, let's do it. So from here, I will put the cursor here. Let's go up 1%. Yeah. So let's draw a line here. Okay, this is 1%. Now let's go down 8% somewhere here. Okay. Now let's go up 20%. Yeah, this 20% here. Now let's go up 25%. Okay. Now we roughly got all the lines. Let's change the color. So this becomes, see, these are approximate numbers. Okay. You can use a calculator to do the lines, but I'm doing it quickly here so that we don't spend time on this. It's fairly understood now. Yeah. So we have the buying zone, we have the selling zone. When the price enters this zone, we have to sell all of our shares or maybe partial shares, then we have the stop loss, okay, which is 8% below the first yellow line. Now, ideally, the stop loss should be 8% below the average execution price. So, your average execution price is something that you will get from your broker. When you try to buy the stock when it is in this range, you will get a price between these two yellow lines. So, whatever that price, you draw a line there, okay? Whatever you make it, you give it like pink color. Below that pink color, come down 8%, that will be your actual stop loss, okay? So, for simplicity purpose, I am drawing this 8% stop loss below the first yellow line, okay? Is there a falling window inside the base? There is no falling window inside the base. In fact, there is a rising window which has been broken. Buy point is in the green zone. See, buy point is in the green zone. Closing price is in the blue zone. So, not enough tightness in the base. Is there a mother baby candle? I don't see any mother baby candle here. Okay. At least in the latest 4 or 5 candles, I don't see any mother baby candle combination. Favorable candles 50%. Yes. What are favorable candles? Well, when the stock closes down compared to previous day, it should close down on low volume. When it closes up compared to previous day, it should preferably close up on high volume. That's favorable candle. So let's convert this to bar. So see this bar, this I will ignore this bar because that completes point number sorry, yeah, that completes point number 1. I will ignore that. So this bar, this bar, this bar do not qualify. All of them are high volume, low closing, down closing. Okay. Both of these qualify because green bars up closing compared to previous day on high volume. So two are in our favor. Then these two more or less it's low volume, 3, 4, then 5, then 6, 7, okay, 8, 9, then 10, 11, 12, okay, 12 out of 24, okay. 12 out of 24 is good enough. Around 50% are in our favor, okay. What did I do just now? Did you notice? I was skipping some candles and I was skipping some bars and I was counting some bars. What does that? Why did I skip this? Because it's high volume, low closing. Okay, down closing. We want low volume down closing. That means institutions are not selling. So red bar down, low volume. Okay, we want low volume on red bar. That is a favorable candle. And then we want high volume on the green bar. Okay, see the color of the volume bar and the price bar do not match, do not necessarily match because this is a what do you call it, bar chart, and this is also called bar chart, but the color depends on previous day's closing. Okay, so the color may not match exactly. What you have to do is you have to focus on color of this bar and then see the volume whether it exceeds the blue line or not. So red color bar, we need low volume, which means volume bar below the blue line. Green color bar, we need high volume, which means volume above the blue line. The color of the volume bar could be anything. Okay. That's how I counted 12 candles. You can do that. You can pause the video or you can go back to the August 2019 chart of HDFC AMC to practice this yourself. Okay. You do it on your own, you will understand. We need at least 50% candles in our favor, right? Because that represents the institutional accumulation. When there is a red bar on low volume, which means institutions are not selling. When there is a green bar on high volume, which means probably institutions are buying. Okay. This is a very simplified way of looking at the base. There are more nuances, but I will not go into the details. There is down closing, up closing, there is strong closing, weak closing. There are a lot of nuances. But here I just want to keep it very simple. Okay. Let's not complicate things. Is there a shakeout? Yes. The low of this was taken out by the low of this candle. That's why this is 0.2. Grade, that means base height is B. So let's look at base height from here till here. It's roughly 14%. So 0 to 10% is A, 10 to 20% is B. Green zone closing, one bar closed inside the green zone. Okay, we would have ideally wanted more to have closed in the green zone. Okay, less than 5% distance to buy point. See, green zone closings, why are they important? Because we want to see whether the stock is attempting to close inside the green zone. Does it sustain there? Is there too much upside overhead supply pressure there? That's why we look at green zone closings. Green zone closing becomes important when the grade is C or D. When the height of the base is more than 20%, 30%, 40%, that's when green zone closing becomes important. If it is A or B, it's not that important because the base itself is very tight. It means the stock hasn't corrected much from the top. Okay. So even if the not many candles have closed inside the green zone, it's still fine. We have looked at previous examples of how stocks went up in spite of the fact that there was no green zone closing at all after point two. By the way, the green zone closing, you have to check after point two how many closed in the green zone, not before point two. Okay. Less than 5% distance to buy point. Of course, from this closing price, what is the distance to buy point? We want to see tightness. So see, it's 4%. Good enough. Upward sloping moving averages, blue, green, red. I have already told you the importance of blue, green, red. Why do I keep talking about this? Just read Mark Minervini's book. He has done research on stocks dating back to 1800s, the late 1800s. He and William O'Neill and David Ryan found out that 98% of the leading stocks of the past were already in a confirmed stage 2 uptrend, which means blue, green, red, before they began their full scale advance. Okay, 98%. Okay, so that is why we look at the moving averages, the 50-day, the 150-day, and the 200-day, because we have to go with data. We don't have to go with opinions. Just because there is a base does not mean that we have to buy. Is the stock already in a confirmed stage 2 uptrend? Okay. So this is our first step. Okay. This is a qualifier. Okay. All of these points are a qualifier. How many are in our favor? 1, 2, 3, 4, 5, 6, then 7, 8, 9, 10. I will take green zone closing because the grade height is B. 10, 11, 12. Out of 14, 12 are in our favor. Mother baby not in our favor. Then closing price should have been in green zone. So out of 14, 12 are in our favor. It's a good enough base to at least consider. Now, this is the starting point. This is the qualifier. Okay. Then you go to like, this is step one. Then you do step two, technical analysis, liquidity analysis. Then you do comparative analysis. You check the relative strengths and all. You do fundamental analysis, see whether the stock is worth buying or not. Then you look at market conditions. If the market conditions are not favorable, like uptrend under pressure, rally attempt, or maybe confirmed downtrend. If the market is in a confirmed downtrend, no matter how many points are in our favor, I wouldn't buy the stock. It's very, very simple. Okay. So liquidity analysis. After this, you have to do liquidity analysis, comparative analysis, fundamental analysis, market analysis. And within technical, you have to check the base count. What if this is a late stage base? What if this is base 4, base 5? What if the market is in a confirmed uptrend? It doesn't make sense to buy the stock. But what if this is early stage, maybe base 1, base 2? What if the market were in a confirmed uptrend? What if the stock was fundamentally strong? What if the stock had great comparative strength? I'm not disclosing or discussing all of those things because the past data is not available. That is why I'm restricting my discussion only to base, because this is the key. of the breakout strategy. This is the key. Once you understand the base, once you get a feel of the base, you will become good at technical analysis, especially for stage 2 confirmed uptrending stocks breakout strategy. Okay, you don't have to buy every base. Okay, let's see what happens after this. Let's move the price forward. So it breaks out on high volume. The actual volume is like 200, 300% above, roughly 200% above the average daily volume. So that's a nice clean breakout, very much expected. Let's see whether the stock achieves the target or not. Moving swiftly towards the target, we want to see in how many candles does the stock hit the target. So from here till this day, because on this day, if you had been alert, you would have been able to sell the stock. Maybe you put an alert here. You were able to sell the stock in this range, but if not this range, at least this one. Okay. So when the stock enters this range, maybe sell all the shares or maybe sell 50% of the shares and probably move your stop loss here somewhere at the low of this. Okay. Just a technical level, the latest low. So 16 bars. Okay. So it took 16 working days for the stock to hit the, what happened here? I can't see.